Cool. Well, we can get things going here. I'm sure per usual, people are going to be coming in just throughout the conversation and recording today's market sync. So anyone who wants to can check it out at a later date. But yeah, thanks everyone for coming on in. Smaller crowd today than normal, but not a surprise, just given that things have cooled off in the market, which we'll kind of go through here. So let's get this thing going. Come on, next. There we go. So the agenda, we're gonna just do a quick macro update. I'll do like a Bitcoin update, and then we can go through some charts. I think Swick and Ekim have a few charts they want to go through, and if anyone else wants to come up and present, or you have questions or something interesting, whatever. This is really just like a free time for us to all hang out and talk shop and get a better sense as to like what we're thinking and where things could be headed. So just as a quick macro update, wanted to just look at some of the biggest indexes for the year and performance. And so, S&P 500 is up very nicely on the year, and same with Nasdaq, up 8% and 15% respectively. The US dollar index, also known as the DXY, is down 1.5%. That's something that we've seen come in quite a bit over the past few months, especially, and that has been most certainly a tailwind apparently for crypto, and also a little bit on the corporate earnings side of things. That's because US based businesses that do business overseas, they have to do a currency conversion. And now that the dollar has come down a little bit rather relative to other foreign currencies, there's a little bit of a tailwind. But it will be really interesting to see how the DXY performs. I know people in crypto are constantly paying attention to that, but so far on the year, only down 1.5%. Crude oil, which is obviously a big component to inflation and global economy, is actually interestingly enough, it's flat on the year, but still nonetheless in a downtrend from third quarter, early fourth quarter of last year with it had a pretty wild run up. And then gold, everyone's favorite analog store value, up 2.5% on the year, severely underperforming Bitcoin. It's a little surprise. Next week is actually going to be a really big week on the economic data front. So we're going to have another inflation print on Tuesday. That's the February 14th. Then we're going to have an inside look as to how the consumer is doing with some of the retail sales. That's going to be on Wednesday. And then on Thursday, the PPI, or Producers Purchasing Index, another kind of gauge of inflation and economic activity. That's going to be on Thursday. So needless to say, there's a lot of data that's coming out next week that it could be market moving at the very least. Um, so this kind of bears the question of like what should we be looking at in the macro worlds that could be helpful for crypto or at least have a meaningful impact on crypto. Let's rip through that real quick. But first, before we do that, just a quick sentiment check. Here is a chart, and of course, this is available under the sentiment data channel under SD Alpha. This is CNN's Fear and Greed Index for traditional finance. It's widely followed, and as we can all see, since the start of the year, where risk was put back on broadly across the market, we've gone from being sentiment-wise from fear to extreme greed. So my guess here would be that maybe we see some sentiments start to mellow out a little bit. That's not to say that stocks drop, but maybe we do see things come in, some of the excitement start to cool down. The people who were tax loss harvesting into the end of the year, everyone's presumably kind of bought back in. Shorts have also been squeezed, so maybe the buying pressure doesn't hold up. And yeah, just sentiment just kind of resets. We get like a mean reversion, maybe down to the lower end of greed, or maybe even into fear. But yeah, I mean, nonetheless, it looks like over the past 6 months, there's been certainly kind of a shift in trend. Right now, we're setting higher highs and higher lows, which is indicative of an uptrend. All eyes on. So I'm just gonna go quickly through like the things that I think everyone should be paying attention to are going to be useful. So inflation, of course. Powell made some comments this Tuesday. I've kind of parsed out what are the more notable comments he made. He says effectively it's going to take time to curb inflation, but he still expects a significant decline in inflation this year. He kind of continued to reiterate what he's been saying for a little while now, and apparently, like the market doesn't really believe him. We can go into that, but he's just saying between the job market and the persistence of inflation, the Fed is just going to have to keep raising its benchmark interest rate this year. I think he even said like our work isn't done yet, and he said that a number of times. Um, One of the other comments he made was these are the very early stages of disinflation and has a long way to go. So I think in typical Powell and Fed chairman speak, like he's sticking to his guns and continue to iterate that they want to raise rates, they want to get inflation down. I think to suggest otherwise could be potentially bad for the market. And so, he's taking more of a conservative, like aggressive approach, which, totally understand. Um, my 2 cents is, and I think a lot of people, is that inflation has peaked. And I think it was just this week, Goldman actually produced a report talking about how their economists internally believe inflation has also peaked. And so you'll see a chart here, core PCE inflation and then headline inflation. They're basically predicting that both are going to fall back down to, close to 3% in about a year's time, which is really, really interesting. So, why pay attention to inflation? Obviously, if inflation goes lower, we're not going to have to worry about more rates. It doesn't necessarily mean that we're going to get a rate cut, but if interest rates aren't going higher, that's not going to be negatively impacting risk assets like crypto, as it has over the past year or so. And speaking of interest rates, that's like another thing to keep in focus going forward. So last week, I'm sure everyone knows the Fed raised by 25 basis points. So now we're at 4.75% for the federal funds rate. The fastest rate hike ever to go from 0 to damn near 5% in about a year. Certainly unprecedented. And it's going to actually, take time, I think, for that huge hike to be reflected in the economy. So, we'll get into that in a second, but corporate earnings and unemployment is obviously like another thing to be paying attention to. And I don't think those have really felt the impact of interest rates. So the Fed fund futures, which we talk a lot about during these syncs, and it's something that I follow intimately, is just a futures market that prices Fed rate hikes, and so it's pretty damn efficient at pricing kind of like what the market expects the Fed to do, and the market is typically pretty on par. Um, Fed fund futures is expecting two more rate hikes this year. So two more 25 basis point lifts. We'll get to 5.25 come, what is that, May 3rd or so, we'll see. And then the market is actually now expecting a cut in December of 25 basis points. Who knows if that will actually happen? These rates, these probabilities move around quite a bit, but nonetheless, really interesting to see. Market still only believes two more hikes are in store in the 25 apiece. Next decision is going to be not for like another 5 weeks or 6 weeks, March 22nd. So we got some time to kill. This is a chart that I wanted to show really quick. So, the 2-year treasury is one of the most liquid, widely followed, and widely influential markets and assets all across the world. Um, it is one that people pay almost more attention to than the federal funds rate because again, it's what impacts a lot of the world. And there's a lot of smart people like Jeffrey Gundlach at Double Line Capital who believes that you should really only be paying attention to the 2-year treasury. It's doing a better job of predicting or at least like showing where interest rates are headed. And so as we'll see here in this chart, The 2-year Treasury has actually slipped below the federal funds rate over the past few months, and has actually trended off of a high, and it looks like it could be in the early stages of a downtrend. And we've kind of seen this play out in the past before. We saw this in 2019, we saw this in 2008 and 2000, where effectively like the 2-year Treasury starts to front run whatever the federal funds interest rate does. And so, if we continue to see the 2-year Treasury yield fall, that's effectively the market saying like, we believe that interest rates are coming in. And that could be obviously super bullish for crypto. If rates get cut, that's a tailwind. There's more liquidity that comes into the space. There's more risk taking that's encouraged. And so yeah, I mean, nonetheless, like I'm looking at this chart. I think it's really interesting. And what it's also saying is that the market thinks Powell's full of shit, and he's not going to keep aggressively hiking. And if anything, rates are gonna become lower over the next year or two. So yeah, something to pay attention to. Keep an eye on the 2-year Treasury and see how that yield trends over time. Another thing we want to be keeping an eye on, this one's a little bit, kind of obvious, unemployment. So last Friday, we actually saw US jobs growth accelerated nicely in January. Unemployment rate actually fell to a damn near 54-year low of 3.4%. So, this is kind of like, and Swick might have even asked a question about this last time around. It's kind of like a double-edged sword. Like the on one hand, it's nice that unemployment is low. It shows that the economy is growing nicely, and the Fed hasn't blown up the system quite yet. And if, like I mentioned earlier, like it's also going to take time for the market to digest some of these rates, and maybe we'll see unemployment go higher. Um, but like at the same time too, and I've joked about this, like it's good if people start getting fired, insofar as that means the business is slowing, and presumably the Fed is going to start to lower interest rates to spur economic growth, and get the economic machine going again. In which case, bullish for stocks, bullish for crypto, bullish for any kind of risk asset. So needless to say, I mean, just looking at that chart, you're kind of like looking at it and you're like asking yourself, like, it's got to go higher at some point. Like, it's just got to be like almost like a mean reversion higher. But so far, we haven't seen it. But maybe, maybe that'll change in 6 months. Again, we just had the fastest rate hike in history. It takes a moment for the economic machine to digest all of it. So, yeah, got to keep eye on unemployment. And then the last one, corporate earnings. So we're in the midst of earnings season, excuse me, right now, which is basically just every quarter corporations in the US report how they performed for the prior quarter. So we're right now digesting last quarter, fourth quarter 2022 performance. And so far, 69% of the S&P 500 companies have beat estimates. I believe that's below like the 76% average. So in absolute terms, like the majority have beat estimates, but like relative to, history, it's kind of underperforming. And even onto that note too, like a lot of these estimates that these companies have been beating, they were based off of analysts who had lowered their expectations for quarterly performance just because of, this expectation of a softer economy. And then 27% have missed analyst consensus estimates for the quarter. I don't know how that pairs relative to historical performance, but yeah, still a good chunk of companies that have not done as well as people have expected. And then down below here, and this is again another chart you can find under the SD Alpha Discord categories. This is the S&P. The purple is the S&P 500 price to earnings ratio. So how much you're paying for $1 of earnings. So in this case, you're paying $22 for $1 of earnings. That compares to a historical average of 16 times. But it's also, so it's still on like a historical basis. It's higher than normal or higher than average. But it is worth noting that over the past, 18 months or so, we have come down from damn near 40 times price to earnings ratio. So equity is like the S&P 500. It's not nearly as expensive as it once was, but it's also not, kind of as cheap or at the same level that it has been historically on average. So kind of in this weird spot of like, are stocks expensive? No. Are they cheap? Not necessarily. So, of course, this will change as companies report earnings and prices reflect said earnings. It could come down, but nonetheless, we want to be keeping an eye as how the corporations are performing. That'll directly impact price of stocks and maybe even impact crypto. But more importantly, it's going to lend some insight as to like just the overall trend in the state of the economy. Moving on. Okay, so we got through some of the macro stuff. If you guys have any questions, feel free to stop me too, or if they come up at any point, like, don't hesitate to post in the channel or tag me. I'll try and lend some insight. But switching gears just over to Bitcoin, this is another chart that we have in the SD Alpha channel. Um, it's a number of weekly moving averages that have historically been really useful gauges for support and resistance, and kind of even, like right now, like they're good moving averages for getting a sense of the change in trend. And so, like we talked about like last week and over the past few weeks, most notably, like Bitcoin's back above the 20-week the 20-week exponential moving average and the 21-week simple moving average. And so those are and it's also above the 300-week simple moving average. But those 20-week and 21-week, those are typically like a better indicator of kind of like the shift in trend. And so we've been holding above them for, knock on wood, a month now. Maybe we go back and test them, but nonetheless, like the fact that we're above is signaling like there's probably a pretty decent chance that, one, the bottom is in, and then two, maybe we're not going to go full blown bull market, but things could maybe just drift higher over the next year as we approach the halving in April of 2024. Um, so while it's holding those two short-term moving averages as support, it is also worth noting that we are testing, or we've tried to, and we have not done it successfully, but break through the 200-week simple moving average, which is that purple line. Sorry for anyone who's colorblind. It probably looks blue, and there's a few other blue ones. And then there's also the 50-week simple moving average that is kind of like that turquoise green that is almost in line with the 200-week as well. Those are both like big levels that have to be conquered, I think, to have a better conviction in the shift in trend. And we're close to those. We haven't punched through, but again, yeah, we'll need to get over them. And so keep a close eye on those for confirmation that the bulls are returning. So at big resistance, however, it is really worth noting that Bitcoin is also in other respects like making big moves. So what I've got here is the dark purple line is the Bitcoin market value. So that is the market cap, and then the lighter purple line, and I should probably change the colors on this so it's a little bit easier, is the realized value of Bitcoin. And so the realized value is just the sum total of all Bitcoins based off of when they were last moved. So if I were to, sell a Bitcoin right now, like its realized value is going to be, $22,000. And that's not going to change until I move it or it's sold again. And so, basically like the realized value is just gives you a sense as to kind of like the momentum in the market relative to market value. So basically what we're seeing here is like the fact that the market value, the market cap of Bitcoin is finally climbed back above the realized value. It shows that basically you have a lot of people who aren't selling their Bitcoin, and there is now suddenly like this big shift in the market where not nearly as many people are underwater. Um, and as we've seen both in 2019, even in 2020 with the COVID dump, as well as 2015, like anytime the market value of Bitcoin gets above its realized value after having spent some time beneath it, it's a clear sign that the bottom's in, and a bullish momentum could return, um, not too far out. Again, doesn't mean we're off to the races just yet, but if you are looking to buy in and you want a DCA, it's probably a good time to start really ramping that up. Of course, not financial advice. This is my last chart before I'll hand it over to Ekim and Swick and whoever else who wants to go in. I actually see that Rec jumped in and maybe he's got some time and wants to chat, which would be great. But altcoin season, right? Like, of course, Bitcoin is king, but we love them alts. Who doesn't? The white line is the price of Bitcoin. The blue line is the Bitcoin dominance. And so, what we've really seen over the past quarter or so, the past 3 months, is like Bitcoin dominance having gone from 38% to, 42.5% in kind of this late January time frame, early mid-January, and then as of recently, has just kind of like fallen pretty substantially, almost like 1.5 percentage points. And so I'm kind of looking at this and saying like, the decline in dominance is clearly like an indication that like altcoins are doing really, really well. And if this keeps going, keeps trending, like it's probably safe to say that you're going to see people rotate money from Bitcoin into altcoins. However, I also look at this and say like it still appears to me like the macro trend is Bitcoin dominance rising. We still have set higher highs and higher lows, and so dating back to November, and so like the bigger term trend is to the upside. And I think on one hand, people are like, "Oh, that kind of sucks because alt season's going away." Um, but on the other hand, I think it's two-part. I think it's one, if we see Bitcoin dominance start to rise, that does set up alts nicely for like insane pumps when eventually people rotate out of Bitcoin. But it is also too like this macro trend of higher highs and higher lows is also like a really good example of the start of the bull market, or kind of like the shift uh like in sentiment in the market. Like anytime historically speaking, the bull market has begun or a bear market is like come to an end, you typically see Bitcoin lead the way. And so seeing dominance climb like this isn't entirely surprising. And my guess would be is like in the medium term, like maybe you see Bitcoin like really kind of like outperform a lot of alts, but in the 6 to 12 months time, like the rise in dominance is just setting up for an insane rotation in altcoins, and everyone loves altcoin season. But of course, these are all just my own interpretations. I know for a fact I'm not going to be 100% right on any of this stuff. And I'm sure other people have got different viewpoints. So, don't hesitate to share your opinions and thoughts. I'm not here to be right. I don't think any of us should be, here speaking to be right. It's more so we're here to explore ideas and possibilities and try and arrive at the ultimate answer that is, going to make us the best returns.
I think the altcoin season slide that you have up right now is pretty useful. I mean, obviously Bitcoin dominance isn't like the number one indicator to tell you like where sentiment is shifting, but it's just curious, like it's just very interesting to look at like alts going crazy over the last like I don't know 3 to 4 weeks, and you start to see like the Bitcoin dominance start to take a little dip. So we'll see where that goes, but I'm definitely got my eyes on that one for sure.
Yeah, definitely. And we've talked about this, but one of the things that I'd like to be able to roll out in the next week or so is we can track like sector performance of altcoins. So whether it's like layer ones or DeFi or gaming or liquid staking derivatives, or AI, for example. It'd be really good to like I think that we've seen some of these alts pump really well. I think like we haven't really seen it in the same size too that we have in the past, hence dominance. Like I'm sure like AI coins have done really well, but privacy coins haven't done well at all. And so yeah, like it would be great for us to be able to just track like how are the sectors performing and what in particular in the alt world is really getting the most kind of like attention and love as of late. And as you know, and I think probably others too, it's like yeah, the AI stuff right now is like super hot.
Right. It's super hard to keep track of everything, but it might be useful to have that sector indicator to kind of give you an idea of what's doing really well and like what's underperforming, and keep an eye on that. So for sure,
And when to rotate too, right? Like we always talk about that. The
it's
rotation
tough.
is big.
It's tough.
The meme coin rotation, that's coming.
Right. It always is. It's just like one narrative to a different, and then it'll always come back, or maybe see some shift. I know like AI coins haven't been really popular in the past, but with Jet GPT and Microsoft picking some of them up, and like all the moves that's going on in, like the actual real world, I think it just got into people's brains like AI is coming, and I guess it's just speculation, like let's just buy a ton of these coins and see where they go, and then everyone got on the same train, they saw them pumping and FOMO'd in, and I don't know, it's a whole mess. But the AI stuff is interesting. I just don't think it's there just yet. There's just a ton of speculation. I know like Near Protocol, they tweeted out something with like Near's integrating AI and they pump like 30%. It's like, all right, we're getting to that point where it's like, all right, man, you can just say you're working with AI and you just go crazy. But yeah, I can share my screen if no one has any questions or anything. Get moving.
Yeah, yeah, feel free to see involved.
We
I'll
can,
stop sharing mine.
yeah, let me know if it's good. Get started.
1 second here. All right, let it rip.
Sweet. So I'll just go over some of the basic stuff. GS kind of covered more of the macro side. And I'm just gonna be looking at like some of my favorite coins as well as some indicators up here. And one SPL that I'm keeping my eye on as well as Samo. But starting off at Bitcoin. Um, I know Rex said he wasn't gonna be able to make it. I hope everything's going all right, Rec. But he'll be back next week. I'm just gonna like kind of go over some of my stuff, and then we'll get back to the regular schedule next week. And I think Swick will be going after me, covering some of his favorite stuff. But nonetheless, Bitcoin here. I'm just keeping an eye. I've heard a lot about the quote unquote death cross, where the 200 meets the 50. I don't really know much about that. A lot of people said a lot of negative things, but we haven't really seen that much of a difference in price here. So I don't know, it might just be a nothing news headline or whatever. But keeping it pushing. We got this lower resistance line that kind of turned its support now with at the level we're currently sitting at. And we're just bouncing in between kind of the 24,000 level and the 22,000 level. Not really sure what's going on here. Maybe we break down and sit in between these two here. But here I'm just kind of buying what I want, slowly stacking like I have been over the last like couple of weeks to month now. Um, whether that means Bitcoin goes to 19 again, whether it goes to 16 again, whether it goes to 25. I've just kind of set my eyes on like if we have a red day similar to how today's looking, I'm just gonna keep slowly buying, and get to my target levels. And then kind of just hodl through 2024, 2025, see where we go from there. But yeah, just keeping an eye on Bitcoin. I know a lot of things obviously correlate with Bitcoin, so it's obviously pretty important to keep your eye on that. But switching over to ETH, similar to Bitcoin, but a lot of these alts are kind of coming up on resistance and just chopping at these pre FTX levels. We saw a huge drop in a ton of alts during the November crash there. Um, Similar to Bitcoin, we kind of hit this level back up pre FTX crash, and we're kind of just bouncing around that. So that's what I'm looking at. We also do have the 20 and 50 day moving average meeting here. Again, I don't know if that really means much, but just something to keep an eye on. I know I've heard a ton on Twitter, so who knows what that means. But Um, that's pretty much ETH. That's all I'm looking at. Just chopping around, seeing if we hold the 200 as like some type of support, and maybe we do, maybe we don't. Um, at Soul here, pretty interesting stuff. I know I saw someone in the trading channel or price talk, talking about this like kind of low resistance line that started back in August, and then we saw it tap up here right after breakpoint and right before the FTX thing. Obviously collapsed and then uh, went crazy down to 8. Uh, Almost regained those losses back, but still haven't reached that pre FTX high. I know that's one I've been looking at. Going over the ETH one, it's like most of these alts, or not most of them, but a lot of the high market caps have just been settling around the pre FTX highs. So maybe we see Sol break out to the upside. And maybe go up to, I don't know. I don't think the 30 level is too crazy to talk about if Bitcoin holds, but just keeping my eye on that. We have a ton of support beneath it, obviously with all the dips going on. So something to keep the eye on. Maybe we jump back up here. So that's Soul for you. Adam's just one I've been keeping an eye on as well. I like to kind of flag some of the top market caps, just where the liquidity is. Just giving some price action. Adam, I'm personally not a buyer right here. I was buying a little earlier. Some of the alts, like some of my smaller alts, like the AI plays I've been looking at, I've kind of rotated out of since they kind of went crazy over the last 2-3 weeks. Um, but Adam's touching the resistance. Maybe we chop back down to the 12 level and kind of stay in this range. Again, another death cross for the 250 meeting. I think we're going to see that a lot here. Very interesting stuff, and maybe we hold that, and we keep to, maybe in the next year we just keep accumulating, staying at, around the same level. I don't expect some crazy pump or dump anytime soon. Personally, I think 2023 we'll see kind of just like a choppy year. We'll see some ups and downs for sure, but I'm not like really expecting anything. It's gonna be more so just me accumulating stuff, not financial advice, of course. And then one I've been keeping my eye on as well. I'm not a big like TradFi guy or anything, but I think it's just pretty good to keep an eye on the DXY. And we've seen since the start of November of last year, we've seen a pretty big decline. What percent is this? Good like 10% dip up until like the beginning of February. And we've been kind of holding this level, and then we kind of broke out of that. I'm not like a TA king, like Rec or anybody, but very interesting to see it pop off, and maybe if we retrace back down, we'll see Bitcoin push higher. I remember someone talking about like correlation between DXY and BTC and trading, and it was kind of interesting how like BTC was pumping even though the dollar was pumping. So maybe we see a decoupling. I don't, who knows? That'd be interesting. Moving on to Orca. This is one SPL that I've been keeping my eyes on. I held down here. Got in around like the 50 level, I believe. Then we saw a crazy pump, which was obviously beautiful if you were a holder. I got out near the top, damn near, which was super lucky. Didn't have a crazy bag or anything, but just still a nice little play from 50 to 140 ish. And then we've been just sitting at this pre FTX little like support resistance line here. And this is what I'm keeping an eye on. Maybe we break down, and I'm definitely trying to accumulate more in between this 58 level and the 90-cent level. That's one to keep an eye on. Maybe we'll see some price action. I know a lot of SPLs have been kind of trading sideways for the last couple of weeks. If we look at a couple others, but just want to definitely have my eyes on. I kind of am worried that I don't have enough exposure to some plays. So I'm kind of looking at levels that I can reaccumulate if I sold my bag off the pump or whatnot. But that's that. And then we'll move over to some of the Samo DAO indicators. This one I've talked about a couple of times on here. I think I've hopped up and chatted about this previously, but this is like honestly one of my favorite indicators. Kind of just showing net inflows and outflows of BTC on exchanges and whatnot. When you see stuff like a massive uh, outflow, you know, normally that's people either buying here, like when we dip, and they just pull out of centralized exchanges, throw on the ledger, hardware device, or whatnot, and kind of just prepare for the next couple of years. And then we see, obviously some dips. People might be pulling out at the highs of their ledgers, getting it back into the centralized exchange, and then selling it off for profit or whatever it is. It's pretty good indicator here, just of like giving you sentiment of where maybe Bitcoin is going. Like, what are people doing with their Bitcoin? I think obviously buying and selling and looking at the chart is one thing, but then you have indicators that are like, for example, this, where you kind of get a sentiment of where people are moving their Bitcoin and what they're doing with it. And as you see, like outflows kind of mean people are accumulating and dipping out of exchanges to hold somewhere else on their cold storage or whatnot. So that's a good sign here that we've seen a price dip. Maybe people bought up here and just threw in the ledger for the next couple of years. We haven't seen anything crazy, and I don't know if people are going to rotate back into the centralized exchanges to sell here. I think that would be pretty stupid if you're a long-term holder. Going from like 16 to 22 or 23, it's not too crazy if you're on like a 2-year time span. So I don't expect anything too crazy with people selling here, but that was one to keep an eye on. And then another one that I didn't notice we had until I was looking over them this morning. Um, this one's kind of going over the amount of Bitcoin wallets that hold 100 Bitcoin or more. Kind of an indicator of where the smart money is going. Right, like if smart money's buying here, we'll see wallet number go up. I believe the price is on a logarithmic scale, and the number of wallets is just linear. And we've seen a huge increase in number of wallets holding 100 Bitcoin or more. Obviously, it's not like the perfect indicator, as people could, maybe a massive whale transfers Bitcoin around into multiple wallets. It could be not the perfect indicator, but it gives you a good sense of what people are doing with their Bitcoin. Maybe they accumulated a ton here. I know we saw a huge dip, obviously starting from the peak bull run down to the peak bear market pain. That was November. And then from November, we saw almost what is that, 15? I mean, we almost saw like 400 wallets here just getting generated with 100 Bitcoin held. So that's just kind of a good indicator of where smart money is buying and holding their Bitcoin. Maybe we see that trend continue through 2023 as people kind of accumulate in these levels and then get prepared for the next bull run. But that was just some of the indicators that I wanted to focus on today. There's so many. I highly suggest anyone hop over. If you are listening on the recording or whatnot, we have a ton of indicators in our Discord. You can go under the SD Alpha channel if you're a DAO member, and you kind of get access to a ton of those. Looking to add more. We were just talking before the call of maybe adding like some type of Bitcoin cycle indicator or a 4-year cycle or halving or whatnot. But yeah, just good to keep an eye on some of these indicators. I know they're not perfect, but it kind of just gives you a different perspective of where the price may be moving relative to different statistics like holders or unique programs or whatnot. So that's all I had for today. But if anyone has a question or concern or anything, just unmute or whatever. But or you can hit me in the channel. That was that. I don't know if Swick, you want to go next, or if you're good to go, or Swick.
Vic, you're muted, bro.
Muted, man. I don't know. You might.
Sorry, normally I just like mute my mic like from my headset, but I must have clicked the mute on what's it called? Like the actual Discord. But oh yeah, I'm ready to rock. Just want to see if anybody had any questions. If not, I'll happy to take it over.
Sweet. Cool.
Yeah, I love the well done, Ekim. I love the Bitcoin whale holding chart. Like, I think we've talked about it last week. It's one I'm just going to continue to check on daily, but like super bullish to just see huge jump in people wanting to in whales effectively.
Yeah, right. You just saw like whales selling all throughout the bull market. It's just like pretty interesting indicator of like what this quote unquote smart money or like whales are doing, right? Like, you know, seeing what they're doing compared to, you know, retail investors or whatnot.
Yeah.
Let me share my screen. 1 second.
No problem, man.
Sorry, my Discord's going absolutely insane right now.
The HDR, man.
I know that's why I think that's part of it. I got to switch over. Let's see. Should be Twitter. Yeah, sweet. What I do want to start with first is because I know it's something that like I've been seeing talked about on Twitter a lot, and if we're doing a market sync, I think it's worth talking about. And obviously, GSS Ekim would love to hear your guys' opinion on some of this. I spent a lot of last night and this morning kind of digging into the tweet Brian Armstrong sent out last night. If you're not aware, there was first a little bit of talk early yesterday in the wee hours of the morning about Kraken being involved in an investigation with the SEC, looking into possibly Kraken offering like unregistered securities. That kind of, sets off a red flag, I think, for a lot of people in this space. Surprisingly, we didn't really see the market react, which I was asking Ekim. I was like, dude, how do we get a tweet like this and like the market just kind of takes it on the chin and keeps chugging along? And then later on yesterday, Brian Armstrong sent out this tweet. And if you're not watching the screen, I'm only going to read the first one. That's what really matters. The rest is just like his opinion on it. Is that he heard rumors from the SEC that they would like to get rid of crypto staking in the U.S. for retail customers. He says he obviously hopes that's not the case, as he believes it'd be a terrible path for the U.S. if it was allowed to happen. I personally agree with that take, but I kind of want to talk a little bit about like what I'm taking out of it and how I'm kind of approaching the market after this news. One, there's a really really good article if you want to like dig into where I'm getting my like stance from. And again, like none of this is anywhere near financial advice. I have nothing close to like any kind of legal degree or anything like that. This is just like me and my mind and how I'm reading into some of this. But Paradigm has a really good paper called Ethereum's New Staking Model is Not a Security. Pretty straightforward title. And they dove in last year around October, kind of digging through like the Howey test, how it applies to staking. And they kind of came out and made some pretty solid arguments that the biggest thing that the SEC currently, at least the rumors are, is stating is that it is breaching security laws purely because staking, in their words, obviously entails a common enterprise. But when you really break that down, for common enterprise to essentially exist, you need some kind of vertical or horizontal commonality. And I don't want to like bore you guys with like legal speak, but Paradigm makes a really strong argument that there really is no horizontal nor vertical commonality based off the way staking actually works. The other thing I wanted to point out is when I first saw the news, I took this as like staking's illegal. I think that was like the first word I said to Ekim. I was like, man, isn't that crazy? Like staking's going to be illegal. Like, how do these chains operate? The way he says US for retail customers, and there's been some clarification in articles with Bloomberg, is it's for retail customers of major exchanges based in the US. Like as an individual in the US, it looks like staking obviously is going to be much harder to regulate. But what they can do is like stop exchanges from offering these kind of services, which are services we see on Kraken and services we see on obviously Coinbase as well. So As of right now, it looks like actual staking through like Phantom per se isn't a target, but these major exchanges are. Wasn't sure if like you had any opinions on that, GSS or Ekim, or I know it's like a pretty heavy topic and can be pretty difficult to get into, but yeah, just wasn't sure if you guys had any opinions there.
My 2 cents on this is one from the Kraken side. It's like, look, the regulatory guidance is such shit in the states that like these exchanges don't, they have to just make a best guess as to what they think is and isn't a security, and then list or not list accordingly. And place like Kraken and Coinbase, they have north of 150 tokens. Like, just if you assume 1% of the time you're gonna get that wrong, then it makes sense that they might have one or two tokens. So that's my 2 cents on it, and maybe we do come to find that there's actually more to it, but that's my 2 cents. And then yeah, I mean, on the staking front, I think this is just like the epitome of like the incompetence of regulators. I think just from an age standpoint, and then two, maybe there's people whispering in their ears to like make this regulatory action to put a slow crypto innovation down. But at the same time too, I think like Brian Armstrong outlines here is that this would just be a net negative for the US. And
Yeah, I just feel like there's like no way they can stop
crypto.
it. Might as well control the horse
Mhm.
instead of just like ban it. I just don't get it. I think it's funny that
Extremely.
like they talk about like I don't know if you looked into it, but like some of the language around it is like right, it's like pooling assets with the pro rata distribution of the profits, and it's like they just have a general lack of understanding then how this works, because like when you stake, you're not handing over your money to somebody. Like you still completely own that money, and it just like doesn't really check any of the boxes for like horizontal commonality where you're handing your money over, it becomes mixed and like intermingled with everybody else's money, and then you're receiving profits off of that. It's like, no, you still completely own your money. I don't know. Just interesting and something that I'm going to be watching closely, and I'm sure a lot of people here saw the tweets and were just wondering about it, so figured start a conversation. But all right, let's look at some charts. Quick disclaimer: I am not a TA guy. I'm still very very new to charts. I think the way that I usually invest is like I don't want to use the words emotional, but I feel like I like basing my decisions off of the actions of like humans and my like observations of how humans react to things, as opposed to like how the charts are operating. So I'm going to mix a little bit of that into like the charts I'm talking about, because again, mine like that's kind of how I chart. But for those of you that joined us earlier this week, you know that I've been watching Kanto. For those of you that like watch me on Twitter, I've been like joking about Kanto and stuff lately, but I do think that Kanto's a pretty serious project. I don't know if you guys saw that Bankless had an episode yesterday where they did a live stream with Zach Cole, who is one of the main contributors to Kanto, and he kind of provided some light that I had never heard of the project, and just kind of got me excited for it. So looking at that chart today, Ekim, GSS, and myself have been watching this chart pretty heavily. It's had a fairly meteoric rise. It capped out, I believe, at like right around 80 cents, which is pretty insane. Seeing as like at the beginning of the year, it was around 6 cents. If you have been watching it and you like have any interest in it, I think the thought that's like at the forefront of your mind is probably like, when do I go in? When should I buy? Uh, I I can't tell you when to buy. I have no idea. Like I can't tell the future. But something that like GSS has turned me on to recently is use of like the Fibonacci retracements, and he's there's been a lot of talk around like the 0.618 number, which would put this around 17. I personally don't know if it's going to get down to 17. I'm not sure that it will. But I do think like the levels I'm looking for is kind of leaving this 0.236 line here and getting like sub 45. I'm probably going to hop back in or at least throw some more money at it if it goes sub 45. Could it go lower than that? Yeah, probably. The thing's burned white hot. And I think you're going to have a lot of people that bought in this range. And if they see it keep going lower, they'll freak out and dump it. just because that's how people work. And Kanto's so small right now that it really, really operates kind of like a meme chain, for lack of a better word. But it's been pretty fun, and I do want to draw the comparison here, and I think GSS laughed at it because it is from a meme account, but I do think it's worth looking at to a certain degree, where it's like you look at the lifeline. I mean, the lifetime of Kanto, super young, like insanely young. This thing launched about 6 months ago. It had a big spike back in November. This is when like the NFT marketplaces launched. Huge spike, crashed back down. I guess crash is a harsh word, but kind of whittled its way back down. And now we've seen a recent jump up. If you look at Solana, I really do think that there's like some certain similarities here. Let's see, man, Solana. I love that I want to say Solana's old compared to this guy, but let's go to the day. It kind of reminds me of this chart a little bit, specifically if we're looking at this time scale here, where you kind of have this peak, this little rundown, and then it just kind of decides to go vertical from here. That's the only thing that like has me scared about waiting till 45 in case this guy runs up, because we have this peak in the drop down, goes vertical at the start of like what could be a bear market. I mean, sorry, a bull market. And it's like this just looks super similar. The rundown pumps up really quick, runs down again, and then kind of enters up only mode. Because yeah, I mean, to me it looks similar. Again, I don't chart, so for all I know, GSS is just like on mute laughing at me right now. But that's what I'm looking at right now. Another token that I'm pretty excited about is Optimism. I've been trying to spend more time not being like a soul maxi. For somebody that like constantly says chain maximalism is like bad for the soul, no pun intended. I have been like the hugest soul maxi ever for the past year and a half, if not longer. So I've really, really been trying to like experiment with other chains, see what's possible on them. And one of those chains lately has been Ethereum, obviously, and a few of its like layer twos, or L1s, depending who you ask. One that I've had a lot of fun with lately is Optimism. Optimism and Arbitrum specifically. Arbitrum does not have a token, so can't really trade it. But Optimism I've had a blast with, and it seems like I'm not the only one. I'm going to go back to the hour chart here. On the hour chart, Optimism, since the start of the year, has also enjoyed an up-only scenario, which I think a lot of crypto has faced as of recently. So not too unique in that sense, but it really seems to be adhering to this trend line. And today and the past couple days, we've been seeing like its first real test of it. Something I like doing is like building out these patterns, and I don't know how accurate they can be, but it's proved useful in the past, specifically with Solana and Bitcoin. So I'm kind of applying it one more time here with Optimism. Just that this looks really similar. What we're seeing right now is pretty similar to what we see like mid-January this year. So my mind kind of immediately went to like, well, what if it happens again? And just kind of applying this pattern that we see kind of follows it fairly closely. I think if obviously depending news like this SEC stuff has me a little shook, just to see like how the market reacts. Pending news, if we stay above this line, I think we might continue to see this climb up, and we could see something in the 4 range, which would be awesome as an Optimism holder. But it looks like even now we're starting to test it again. We tested it a couple days ago. We're now below it on the hour. So I'm interested to see where this closes out. If we do have like a meaningful close below, I do think, we're going to see a little drawdown here, just because the entire market's been running white hot as of late, and it would make sense for things to chill out a little bit, seeing as a ton of these tokens have been pretty heavily in the RSI overbought. This guy just came back down, though, into a more normal range, so adds a little bit more credence to possibly seeing it bounce off the line and jump back up. Gonna hop over to Sol. Again, not as fancy as some of the other guys, but had a line here that I've been watching, and I think a lot of people on crypto Twitter have also just been calling out this like 22.3 level, and it seems like anytime we get anywhere near it, we bounce right off of it. Today seems to be one of the first days where like we've really dipped below it. I don't want to say like we've like dipped below it, but we have more than a wick, like an actual candles reaching below this line. So I'm excited to see what exactly Sol does. Again, if it goes below it and we drop down a bit, not really going to freak out. I still think long term, Sol's an awesome buy. I think most people in this call would agree that we're all interested in Sol on the long term. But it could be a lower price and a better entry point is really what I'm looking for right now. And I think that's like the method for all of these tokens I look at is I've explained it in the past. I'm not much of a trader, which is probably why I don't spend too much time on TA. Definitely more of a buyer. So my entire strategy is when can I time the best time to buy? Not really trying to time tops, definitely just looking for price action that could potentially give me a better entry point. Like for example, Kanto. It went up to 80. I felt the FOMO and I wanted to buy more, but instead of buying more was more so looking at, okay, if this traces down a little bit, what number will I be comfortable buying it again? And that's why I said earlier, right? My number for this is going to be 45 or under is when I start throwing some more money at it. And then as GSS likes to say, if it goes below 30 again is when I air quotations back up the truck for Kanto. I know it's already 11 over here, so we went the full hour. Don't want to hold anybody too late. This might be the first time we've ever actually nailed the clock on this one, and we didn't go like 30 minutes over. But was wondering if anybody has any questions. Those are the tokens I'm really focused on right now.
Nice. Nicely done, Swick. Yeah, the Kanto chart, man, insane. And
It's
obviously a
scary.
project
As
that's
like a holder, it does scare you.
yeah.
You're like, man,
Oh
this
yeah,
is
for sure.
such a fucking meme. Sorry, pardon my language, but such a
Whoa.
meme chart.
No, I mean, I
You know,
think it's like
you laughed
interesting.
though. I mean,
I
like,
think it's yeah, it's interesting. I mean, like I think a lot of these charts they have like pretty interesting setups right now, and especially today where things are coming in quite a bit. So I think it's good to just be aware of particularly like the downside scenario, and I think one, being mentally prepared for if and when we hit certain levels, and then two, like if you have money on the side and you want to get in, like yeah, don't hesitate. We always talk about like max pain here, right? As it goes higher, not that it dumps lower, but it goes higher, and then you're like stuck playing mental gymnastics of like, do I buy in now? Do I wait? Do I chase? And yeah, it's exhausting and
yeah, I feel like it's
expensive.
always way easier to buy dips. When you buy a dip, it's like you're already betting on like the downward price action. But when you start buying on like run ups is when it's like, oh man, like I could get. Do I accidentally time the top? That's like more my fear. As long as I'm buying a dip, it's like I know I'll never buy the bottom. That's fine with me. My bigger fear is buying the top, obviously. But I mean, I think right now most tokens over the next 2 years were nowhere near their tops. Most good projects, at least. There's definitely some tokens that are going to be having a hard time, but I think we're still down in the trenches right now. And if your horizon's long enough, you'll be in good hands.
Well said.
Um, quick question, Swick. Which indicator is this? Which indicator did you use?
This
This?
one, the little rainbow,
Yeah, yeah, yeah.
that is the Fibonacci, the Fib retracement. I'm actually pretty new to
And
it. I think GSS, if you want to give him the rundown on what the Fib is, similar that you gave me the other night.
Yeah, for sure. So I think like anything else, as it relates to technical analysis, it's what works is typically what's most widely followed and what the market is using, and everyone kind of converges to it. But so I'll just preface it with that. But the idea behind the Fibonacci retracements is that they're like horizontal lines that can basically lend some insight into where support and resistance are. And it's based off of like the Fibonacci sequence, which is actually based off of like this Italian math magician who was able to find that these sequence of numbers are found in like tons of facets of life, like in nature. Um, there's like a desirable like hip to shoulder or waist to shoulder ratio, like the 618. Yeah, I mean, there's like a whole bunch. I could go on and on about it, but effectively, it's you to draw Fibonacci retracements. You draw from the swing low to the swing high, and then it can lend some insight as to where like support might be. With the 618 fib, 0.618 typically being known as the golden ratio. That's where like a lot of traders kind of keep a close eye on and expect retraces to kind of bottom out. Um, I would totally suggest people who are interested to go and kind of read up on the golden ratio and the Fibonacci sequence. It's actually the golden ratio is actually known as I think the divine proportion, and so it's found in spaces, whether like geometry to like even human DNA. So one of those like crazy things that they programmed into the matrix, and yeah, for whatever reason, it's got some relevance and usefulness sometimes in trading.
Okay, thank you.
Of
So
course.
if I'm to look to buy now, like let me not use the word nuke though, but it would be like for Kanto, probably like 0.19 up to like in between 0.3. I can't really see the chart numbers well, but like 0.36 to like 0.139 is probably good enough on the placement other than waiting 0.45. I don't know if you can. Like personally, I think 0.45 is probably still a danger zone, using this Fibonacci indicator for my opinion.
Yeah.
So
Yeah, look, I think it's like a tool that you use in conjunction with other things. Like you should probably use it just to confirm a trend, and maybe you use it along with the RSI, or you use it along with a simple moving average and or other kinds of like levels of support and resistance that you draw. It's just like another way of trying to confirm, like a bottom or a change in trend or like a top. So never use it in isolation, I think, for trading and making a decision, but use it as kind of like another tool in your toolkit.
Awesome. Yeah, well put.
yeah,
Yeah, I think just to have like the conversation, and just because like we're here and we're going to talk. The reason